Let's talk about the silent thief picking your pocket every day. You might not see it, but it's there. Its name is inflation. It's why your grocery bill is higher, why gas costs a fortune, and why retirement can feel like it's built on quicksand. You've worked hard for your money, you've saved, but what if that cash is losing its power? Every dollar you have is worth less today than yesterday, and it will be worth even less tomorrow. This isn't just a problem for the super rich. This is a 5-alarm fire for the everyday person, for you. But this isn't a video about fear. This is your playbook. This is the guide you need to turn the tables on inflation, stop your money from leaking away, and start building real wealth this silent thief can't touch. So, what is this invisible force? Simply put, inflation is the rate at which prices rise, causing the purchasing power of your money to fall. Think of it this way. A few years ago, $20 got you a movie ticket, popcorn, and a drink. Today, that same $20 might just barely cover the ticket. The bill looks the same, but what it can actually buy has been slashed. We measure this with the Consumer Price Index, or CPI, which tracks the cost of a basket of things an average household buys, from milk to gasoline. When the basket's cost goes up, that's inflation. For the 12 months ending in May 2025, for instance, the annual inflation rate in the US was 2.4%. Now, 2.4% might not sound terrifying, but here's the brutal truth. Inflation compounds. It builds on itself year after year. Imagine you have $100,000 in a safe account, earning 0 interest. After 10 years of 3% inflation, that $100,000 has the buying power of only $74,000. In 20 years, your nest egg has been effectively cut in half, with the purchasing power of less than $55,000. You haven't lost a single dollar, but you've lost nearly half of your wealth. This is the devastating power of inflation. It's a hidden tax on your savings, and for anyone not actively fighting it, it's a guaranteed path to a less secure future. It punishes savers and makes holding cash a losing game. How inflation kills a safe portfolio. So cash is a melting ice cube, but your investments are safe, right? Not so fast. A traditional portfolio can be just as vulnerable. Let's start with bonds. A bond is a loan you make to a government or company for a fixed interest rate. That word, fixed, is the problem. Say you buy a bond paying 3% interest when inflation is 2%. You're making a 1% real return. But if inflation jumps to 4%, your bond is now losing 1% of its value each year. And if you try to sell it, no one will pay full price for your 3% bond when new ones are paying 5%. The price of your bond has to drop. So, bonds get hammered. What about stocks? In theory, stocks should be a decent hedge, since companies can just raise their prices. In reality, it depends on the company. Many businesses get squeezed by rising costs for materials and wages. If they can't raise their own prices without losing customers, their profits shrink. Plus, the market hates uncertainty, and high inflation is pure uncertainty. It spooks consumers and leads to higher interest rates that make it more expensive for businesses to grow. While stocks generally beat inflation over decades, there can be long, painful stretches where they fail, just like in 2022. A standard 60-40 portfolio isn't a life raft, it's a rowboat in a hurricane. You need a better strategy. All right, let's get to the solution. It's time to build a fortress around your wealth. First up, Treasury Inflation-Protected Securities, or TIPS. These are special government bonds where the principal value adjusts to match inflation. If the CPI goes up, the value of your bond goes up, and so do your interest payments. They are designed to protect your purchasing power. Second, let's talk about real assets and commodities. Actual physical stuff. A classic example is real estate, as property values and rents tend to rise with the cost of living. You can easily invest through real estate investment trusts, or REITs, which are companies that own properties. You buy their shares like a stock, gaining exposure to real estate and collecting dividends that have historically done a great job of outpacing inflation. For the period from late 2012 to early 2025, REIT operational growth beat inflation about 80% of the time in the second half of that time frame. Then you have commodities like oil and metals and of course gold, the classic safe haven asset people turn to when paper money loses value. Third, we only want stocks with pricing power. These are companies that can raise prices without their customers fleeing. You find them in key areas, consumer staples. Think companies selling things you'll buy no matter what, like toothpaste and toilet paper. Healthcare. People need medicine and medical care regardless of the economy. Utilities, you have to keep the lights on. It's a non-negotiable expense. Also, focus on dividend-growing stocks. A company that consistently increases its dividend is showing financial health, and that growing income is a powerful way to beat inflation. If you're finding this guide valuable, do me a favor and hit that like button. It really helps the channel get this info to more people. And if you haven't, subscribe and turn on notifications. In the next video, we're going to build a sample inflation-proof portfolio from scratch, step by step. You won't want to miss it. Playing offense, sectors that can thrive. A strong defense is vital, but a great strategy also needs a powerful offense. Let's look at sectors that can actually benefit from inflation. The most obvious winner is energy. When oil and gas prices spike, the companies that extract and sell them can see profits explode. The same logic applies to the broader materials sector, which includes companies that mine for metals and produce chemicals. They sell the raw ingredients for everything else. While the market struggled in 2022, many ETFs tracking metals and mining delivered positive returns. Another area is the financial sector, specifically certain banks. Inflation forces central banks to raise interest rates. As rates rise, the spread between what banks pay for savings and charge for loans, their profit margin, often gets wider. Finally, consider industrial and infrastructure companies. Inflation often comes with big government spending on things like roads, bridges, and the power grid. The companies that do that building can see a massive surge in business. Inflation-proofing your daily life. Your portfolio is your engine, but you need to patch the holes in your financial ship. First, get serious about budgeting. You need to know exactly where every dollar is going to fight lifestyle creep. If your raise was just a cost of living adjustment, you haven't gained new spending power. Keep your lifestyle stable and invest the difference. Second, master debt management. High-interest debt, like on a credit card, is a guaranteed loss that no investment can beat. Pay it down aggressively. On the flip side, a low, fixed-rate mortgage is your friend. You're paying it back with money that's worth less than when you borrowed it. Third, rethink your emergency fund. That cash is losing value daily. You still need a liquid safety net, but make it work for you. Move the bulk of it into a high-yield savings account, HISA. Online banks offer rates dramatically higher than traditional banks, which will seriously reduce the damage from inflation. It's easy to feel powerless against a force like inflation. But you are not powerless. You now have the playbook. You understand how inflation works, which assets are vulnerable, and which tools to use to fight back. You have your defensive shield, tips, REITs, and stable companies. You have your offensive weapons, sectors like energy and materials. And you have the daily habits to keep your financial house in order. Protecting your wealth is about having a complete, proactive strategy. The journey to financial security is a marathon, but with these strategies, you have a map. You're ready to not just survive inflation, but to conquer it and build the secure future you're working so hard for.